All right, in this lesson, we're going to walk you through a LIFO example, a comprehensive example. So if you haven't watched the other two lessons that precede this lesson, you may want to do that as we talk really about the mechanics in those lessons. And here we're actually pushing you forward through the quantity issues that might occur in the real world. So let's take a look at the example first. Company A tracks the number of units purchased and sold throughout the year, but applies its inventory method at the end of each period. Hence, we're going to be using the periodic inventory system. Given the inventory below, calculate the cost of goods available for sale, ending inventory, and cost of goods using the LIFO method. So we've got our information here. Notice that we have been given kind of a chart of dates. Really, everything's organized by dates, and then the transactions that happen in between them. So we got beginning balance, we've got sold, we've got purchases. So we're going to be looking at that, and we're going to kind of change this chart a little bit to help us solve for LIFO. So we've got a couple steps that we're going to walk ourselves through to understanding how to calculate LIFO inventory using this information provided. So let's take a look at our first step. Our first step is to ask ourselves, how many units did we actually sell during the period? And we're going to need to use that when we start calculating cost of goods sold. So if I look here, it looks like that on July 5th I sold, July 17th I sold, and July 27th I sold. So we're going to add up those units that we sold during the period. So in this case, 1,000, 3,000, and 5,000. So if I was add up all of those, we sold 900 units. Okay, so 9,000 units. So we've sold 9,000 units. That's a number that we're going to need to know when we calculate cost of goods sold in a few minutes. So 9,000 units. Step number one, how many units did we sell? 9,000 units. All right, step number two is that we need to figure out what order we're going to be using our LIFO transfers. So in this case, we're going to line up all of our beginning inventory and purchases by date. Now here they've done it by date already, so all we need to do is just pull them out of the table. But if they are not, if they are mingled up with each other, then the first thing you need to do is unmingle them out and put it from earliest to the newest or the latest date. So in this case, we had a beginning inventory of 7/1 of 2,000 units at $40. Then on 7/13, we purchased 6,000 units at $44. And then on 7/25, we made another purchase of 8,000 units at $50. So that's what we have lined up there. So step number two, line it up by date. Only purchases or beginning inventory, not sold items. The sold items we don't care about. We kind of took care of that in step number one. All right, step number two is we got to figure out the goods available for sale. To do that, we have to extend all of the number of units that we have times the cost that we incurred in obtaining that inventory. So in this case, what I did was I added another column to the end of the chart that we just did in step number two, and I'm going to extend that cost by taking the number of units and multiplying it by its unit cost. So in this case, for our beginning inventory, we had 2,000 units times $40 gives us $80,000. If I take 6,000 times 44, I get $264. If I take 8,000 times 50, I get 400,000. And if I add all of that together, I get $744,000. So our goods available for sale equals $744,000. And we're going to need that later on when we calculate ending inventory. So $744,000. It is also part of the problem. What was the goods available for sale? Our goods available for sale was $744,000. All right. We can also look at this from a unit perspective. How many units did we have to sell? Well, during the period, we had 16,000 units to sell. So 8 plus 6 plus 2, we had 16,000 units at a cost of $744,000. All right, so let's move on to step number 4. In step number 4, we're going to actually calculate our cost of goods sold. So notice here, we have the total amount sold. We sold 9,000 units, and then we've got our table here. And that table is going to help us figure out what our LIFO layers are going to be. So remember that LIFO means last in, first out. So the latest one that came in will be the first one out. And we do this based on how many units we have that we need to allocate a cost to. So we sold 9,000 units, and now we need to cost each individual unit with a cost. So we start with the last one and work our way up to the oldest one. So in this case, we're going to start from the bottom instead of the top. So the last one that came in was this $50. So if we have 9,000 units, can we allocate the cost of $50 to all 9,000? No, we can't, because there's only 8,000 units that we have that costs us $50. Therefore, we can only allocate $50 to the 8,000 units that we sold, not the 9,000 units that we sold. So to write this down here, we're going to take July 25th and we're going to take all 8,000 units and we're going to cost our 8,000 units at $50. Okay, so we've got 9,000 units, 8,000, we've given it a cost of $50. Now we're missing a cost for the last 1,000. Now we work up to the next latest cost. The next latest cost was $44, but we purchased 6,000 units at $44. We don't need 6,000 units. We only need 1,000. So we're going to take 1,000 from that 6,000 and allocate the last 1,000 that we sold at a cost of $44. So on July 13th, we're going to take that 1,000 units at $44. And now we've costed our 9,000 units. Now our 9,000 units that we sold, we've given it a cost to each one of those. The first 8,000, we gave it a cost of $50. The last 1,000, we gave it a cost of $44. So generally speaking, in our layers here, we have no more at 50. We have 5,000 at 44, and then we still have the 2,000 at 40. So we haven't even touched the oldest cost. And that's usually what's going to happen is as you get bigger and you grow, that oldest cost is not going to be absorbed unless you sell everything. So that's it could be a good or it could be a bad thing. All right, so let's go ahead and extend this cost to get us our goods available, a cost of goods sold. So 44 times 1,000 is 44,000. And 8,000 times 50 is 400,000. If we add those together, we get $444,000. That's going to be our cost of goods sold. So the 9,000 that we sold to our customers, it cost us $44,000. And again, it doesn't matter which one they took. They could have took the ones that came from July 1. That's okay. We don't care. We're just only looking at the cost from last in to first out. All right, so now let's calculate our ending inventory. We can calculate our ending inventory using this equation here. Goods available for sale minus cost of goods sold equals our ending inventory. We know that our goods available for sale in step 3 or 2, I don't remember, $744,000. Okay, so we know that's how much goods we had available for sale and its cost to us. Now, our cost of goods sold we just calculated at $444,000. And that leaves us an ending inventory of $300,000. So of the inventory that is still left in our possession, we have a valuation cost of $300,000. $444,000 has already left our facilities in the hands of the customers who purchased them. So that is a comprehensive example of last in, first out periodic example. Key things going here, looking at step by step, going step by step and making sure you do all the steps so that you don't get numbers confused. There is a lot of things that can go wrong here. And if you don't go step by step, you might start to mix some numbers. Understand the numbers that you're doing and the numbers that you're calculating. Otherwise, you're going to be messed up understanding, oh wait, this doesn't mean, and ending inventory, it means cost of goods sold. And so now you have two numbers that are incorrect. So again, step by step until you are comfortable with this calculation. Once you're comfortable with this calculation, then you can go on and do shortcuts or remove steps that are not necessary in calculating those three amounts. All right, so hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or click in the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.